Again, my name's Jeff Wood. I've been a loan officer here at HomeStreet Bank 20 years. I've been part of Affinity Lending for most of that 20 years. And again, part of our program is to help bring these classes to you. And at the end, I'll talk about kind of what we do for your benefits and all the things that we work with our benefits package. But today we're going to talk about buying a home with down payment assistance. Now, a lot of it is very geographically specific and income specific. So there's a lot of times questions will come up, and that's why we'll do it at the end about, oh, what do I qualify and stuff like that. So personal questions, I'm more than happy to talk with you after the class or email. My information will be on the slide, but it's a very personal thing a lot of times with down payment assistance because it's not for everyone, but there's a lot of different options out there for a lot of people to buy homes. So we'll get started with the program as well. First is, what is down payment assistance? You'll see it abbreviated a lot of times as DPA. So you can see what down payment assistance is and the different types of assistance that we can do here. There are some other ones out there that you might see as well. We try and cover as much of the programs in Washington State that we can. So there are some other ones you'll hear about. We don't always do them, but there are some other ones out there. But mostly the kinds that we work with at HomeStreet with down payment assistance is deferred second mortgage or silent seconds. So deferred seconds, so it'll sit there as a second mortgage and you have no payments on it. And we'll kind of talk about that one down the road. Also grants, you'll get grants for down payment. And so it'll add to your down payment and your down payment assistance. So you can sometimes layer these loans. And then some of our other programs that offer down payment assistance are down payments that are shared appreciation. So if they give you 20% now for a down payment, they're going to want 20% when you sell the house. So that's the shared appreciation. So if you buy the house for $300,000 now, when you sell it for $400,000, the shared appreciation is that 20% of the new sale. So there's some of those out there. Some of the down payment assistance programs through some of the nonprofits that we work with still use that shared appreciation model. And then one of the last ones that a few of us work with at HomeStreet is community land trusts. There's 27, I believe, in Washington State now, 27 different land trusts. HomeStreet works with two. There's one in Seattle, one on Bainbridge that we work with specifically. But community land trust is another form of down payment assistance that helps keep houses affordable. So a lot of other things we'll cover is just additional requirements. Income and geographic restrictions are tied to most of these loans. So some are statewide, some are county specific, some are city specific. There's certain down payment requirements that you have to meet. So it's not just, oh, I get 20% down and that I don't have to put anything into it. Sometimes they require a certain percentage of $500 of your own funds or 1% of your own funds into the transaction. So we'll speak to that a little bit as well. Education requirements, we have a number of different down payment assistance programs, but a lot of them take you have to take a homebuyer class. And lately we haven't been able to teach the homebuyer classes in person. So we've been doing a lot of online links where you can do them online and kind of fulfill that need through online classes. Now, some of the classes we have to have you go through certain companies that cost anywhere from they're about $50 per person. So a couple would spend about $100 on those classes. We do have a free class, which we'll provide a link for later, but it doesn't always apply to all of our down payment assistance programs. There's a couple that we can use that require down payment assistance class or first-time homebuyer classes, but they don't tie into this like Washington State Housing Finance Commission classes. Those have to be used for their down payment assistance programs. And then the other one is programs that sometimes we get have limited funding. So sometimes we might get an email saying, oh, we're out of funds for this program. I think the one I saw most recently was Pierce County. They ran out of funds for the Pierce County down payment assistance of $20,000. So once the funds are out, they have to wait for another allotment to come from wherever their sources of funds are coming from. So sometimes they do run out of funds there. And then, so we'll go into next with recommended steps. So with most down payment assistance, it's made available through affordable non-housing nonprofits or state agencies. So the biggest one that we work with is the Washington State Housing Finance Commission. Um, and so with the Washington State Housing Finance Commission, they do most of our down payment assistance where we can do the first mortgage through them and the second mortgage for the down payment assistance. And then, so at times, multiple sources of down payment assistance can be used to lower your monthly payment. So we could layer them. I've layered loans up to 6 different loans at times where you have the first mortgage from the Housing Finance Commission. You get a second mortgage from them. You might get a grant, and then maybe another nonprofit will throw in $10,000, and then maybe the land trust will do the remaining of the down payment. So there can be a lot of layering depending on where you're purchasing. Okay, go to the next one. So again, there's a lot of different programs that are available within different counties. The deferred payment second mortgages are also known as silent seconds. You don't have to usually make payments on those loans. They'll sit there until you either have paid off your first mortgage, refinanced, or sold your home. Let's see. And also some of the structures on the loans have interest and some don't have interest. So maybe they'll be at a 0% interest or 3% interest over time or 4% interest, but it's simple interest. It's not compounding. So on a $10,000 loan amount, you might have a 1% loan fee. So they charge $100 per year on that $10,000. The next one are grants. So there's not too many places that we have grants at the moment. One of the biggest ones is the Federal Home Loan Bank. They offer up to $7,500 for down payment assistance. And what's nice about the Federal Home Loan Bank is the money's forgiven at 1/5 per year. So if you borrow if you get $7,500 from them, they'll forgive it at 1/5 per year. So basically $1,500 a year until it's gone. So if you live there for 5 years, you don't pay them anything back. So that's the closest thing to free money that we have. We sometimes get some notifications of other money that comes in from the government that we work with. A lot of times it goes through a nonprofit like HomeStreet. And they'll do anywhere from 7,500 up to one time, I think 20,000 in down payment assistance. And that can be forgiven at I think that one was forgiven at 1/3 per year. So after 3 years, you didn't have to pay that back. But that was a one-time thing with the government that came up. So sometimes those come up and we have availability. The Federal Home Loan Bank is something we get on a yearly basis. The money comes out April 1st. The reservations get taken pretty quickly, usually within the first month, because that is one source of free money, basically, that borrowers can get if they qualify. Now with the shared appreciation, you'll see shared appreciation come up on purchases of a home where they can help you come in with, let's say, a $200,000 house, and they're putting 20% down. So they've got $40,000 for you to get into a house. But again, I explained it earlier, where when you go to sell the house, that shared appreciation is paid back, that 20% of the sales price. So with shared appreciations, you see those a lot of times with county organizations. What's the, I'm blanking real quick, sorry. Like over here where I'm at in Kitsap County, they have Housing Kitsap, where Housing Kitsap will give you 20% if you do some work on the home, and then they'll kick in 20%. And then you'll see some of the same things with Habitat for Humanity, where they'll kick in a certain percentage, and then you could share that appreciation once you sell the home. So there's a few organizations that we work with that do that. And then the last one is a community land trust. The community land trust is for those that want to try and keep the housing affordable within the area you're buying. So again, I said we work with one in Seattle with Homestead Community Land Trust, and then we work with HRB on Bainbridge Island. But what they do is you actually own the home, but the land is leased from the land trust, so they can keep it affordable. So the value is not in the land of the property, but in the house itself. So They keep it as a lower market price, but when you sell, they also sell it to another low to moderate income family, and they keep the price low. So you don't sell it on the open market, you sell it to somebody that's in their approved system. So you have buyers, you don't use realtors in most cases when you're doing a resale. So those are the four kind of overviews of the down payment assistance types, and I'll kind of go into each one of those a little bit here next. Um, so the down payment assistance programs that we mostly use in Washington, because it's more universal, is with the Washington State Housing Finance Commission. And so they can be found, I don't think we have a link to theirs, but it's their acronym, the WSHFC.org. And they're set up for most of their first mortgages through them, and then their second mortgages usually have to be tied with them. What's nice is they could use Home Advantage or their Opportunity loan programs. So the Home Advantage is a great program because their income limit on that is up to 160,000 for a family. It used to be at 145, but they just bumped it up to 160. Now the House Key Opportunity program has income limits based on the county. So every county is a little bit different. King and Snohomish probably have the highest income limits on those programs. So on those, we'd have to check to see if you qualify for the opportunity. But again, most of my customers do qualify for Home Advantage. And we'll kind of talk about that here in a little bit on Home Advantage. So with their program, you have to be within their income limits. Your credit score has to be at least 620. So we take on your credit scores your middle score of 620. So if your score is 605, 620, and 640, you're okay for this program. But we look at both borrowers if there's two borrowers. And then the amount of down payment assistance varies with each program with them. And so the down payment assistance for Home Advantage can be 4% or 5% of your loan amount. It's not of the purchase price, it's of your loan amount. So if you have and I'll have an example of that. I believe it's a $450,000 purchase. So with 3% down, it'll come up here and what that amount is. With Opportunity, they actually have $10,000 for a lot of the down payment assistance that they work with. And if it's a needs-based, they can go up to 4% as well. So there's different programs up to, I think you can go up to 1,000 on that one. And so I haven't done that one here in a couple months, so I'd have to refresh on that one. But with the Opportunity program, it's a little bit less on down payment, but it lets you get in with less of a down payment as well too. And then let's see, the second mortgage, it can be paid back with most of the programs. Most of them are deferred, but you can make payments on the down payment assistance. So there's interest accruing on a lot of them, but again, you don't have to pay it back until you pay off the mortgage, refinance, or sell the home. And most of these do have to remain as owner-occupied properties. It's something where you can't buy it, use down payment assistance, and then go buy another house and rent that one out. Typically, they require you to be a primary residence to use these programs. So it's not something where you can buy it and then rent that one out and buy the next house. In a lot of cases, they'll require you to sell it and not rent it out. So there's a lot of, like I said, there's a lot of information on each one of these programs. So I'd contact one of our loan officers or contact me. I can walk you through different programs. So with the down, and so I think we go through the example on the next one. So this is a silent second through Home Advantage. So we've looked at the sales price of $450,000 with 3% down, which is the $13,500. Your loan amount's $436,500. Now with $436,500, we'd base your down payment assistance of 4% off $17,460. So that covers your down payment, and it gives you about $39.60 for closing costs. So it can cover some of your closing costs. So let's say your closing costs are $7,000. With a $4,000 in costs covered, you're sitting there with a little bit over $3,000 out of pocket. So it can help bridge the gap, so you don't have to come out with $13,500 out of your own pocket, or even up to $17,000 out of your pocket. So it's nice to be able to to keep some of that money in your pocket and to be able to go and buy other things for the house once you're there. So and that's the Home Advantage program. So there's, like I said, there's a couple other different options that we have with the Opportunity program. There's other seconds that we can do. Through City of Seattle offers 55,000. Pierce County has a $20,000 grant. City of Tacoma has $20,000. And then I'm trying to think. Those are the main ones that we work with. And then we have some others that if you have a person with disabilities, we work with Parkview Services. They have down payment assistance anywhere in Snohomish and King County, anywhere from 30,000 up to 75,000, depending on what they have available at the time. So, but this just kind of gives you an idea of what the down payment assistance does just on a general basis for the Home Advantage. And again, the income limit we're just bumped up to 160,000 on this program. Let's see. Okay, and then the grant program that we kind of talked about a little bit was Federal Home Loan Bank grants. It's available to qualified buyers with low to moderate income. So it's 80% median income for the county you live in. So depending on the county you're in, we go off the 80% income limit per county. So that's where we'd have to check. If you're looking in Pierce County, it's completely different than what King County is. King and Snohomish usually have the higher 80% median income. I want to say it's around 85.5. It could have bumped up a little bit, but again, we can look that up per person basis. And so with their homebuyer class, you have to complete their homebuyer education class. You're eligible up to $7,500 in grants. You can use it for down payment, closing costs, and then after 5 years, there's no repayment as long as you're occupying the house. So if you go to refinance after 5 years, that won't be there. The grant they'll remove the grant on there. And they do it's a pretty simple release of the lien on it. So with Federal Home Loan Bank, it's nice. It's a great program. It's just the funds disappear pretty quickly, just because it is a free program. The next one is the community land trust. Is how community land trusts work. A family or individual purchases a house that sits on land owned by the land trust. And so how they first used to work is they didn't have as many houses on the market. So when you went to go buy it, you'd buy the house at normal rate. And then the community land trust would kick in a whole bunch of money to bring down your first mortgage. And they would own the land based on that. And so they used to have it where you can go buy on the open market. Now it's more of reselling their current inventory so they don't get too large of an inventory. So right now you just have to, if you're interested in one of these programs, you have to wait till one of their properties comes up. And they're usually within the city of Seattle limits, or the ones that I'm working with on Bainbridge or on Bainbridge Island. And so they can help you get into an affordable home. Like one I'm working with on Bainbridge, it's 189.5 on Bainbridge Island, which if you know Bainbridge Island, it's hard to find anything under 500,000. If the 500,000 is pretty low to even consider. But it's more affordable because the homeowner's only buying the house. You lease the land. It's typically on a renewable lease. And then when homeowners agree to sell the home, it's sold typically by the land trust. So you're not sitting there listing it as a normal home as you would as a realtor. So you're not paying the realtor fee, so they can keep that cost out of it. But they have a shared appreciation to where you pay back your loan, you get that equity, but you also get a certain percentage of the sale for the longer you have it. So it's like 6 or 7% of the appreciation. So it's something where you're not going to get a house for 200 and then suddenly sell it for 600. They'll keep it affordable for the next buyer. So it's not for everybody. Some couples, some families, it's a great fit, especially if they want to be closer to work. But again, most of their income limits are 80% median income for the county. So, and if somebody's interested in that, I can run the numbers for them and just kind of let them know what that program is. And so, but we work with Homestead in Seattle is the one we mainly work with. Okay, and so this is just kind of shows you the land trust home value is 425,000. The leasehold they'll kick in. The leasehold kicks in 150,000 of your purchase price. So your loan amount is now 275. So it shows you how much lower your payment would be based off of with a CLT, whereas with a purchase of 3% down, you'd have a loan amount of 412,000. So your payment on that would be significantly higher for 400,000 over a $275,000 loan amount. So it kind of gives you just a little bit of an illustration of what you need. But they do cover a lot of your down payment, and a lot of times they only require 1% of your own funds into the transaction. So the home purchase price is 425. They need 4,200 of your own funds into the transaction. Um, and so it just depends. And then HRB, I believe they want $1,000 of your own money into the transaction. So there's differences between each land trust. And again, there's quite a few in the area. We work with 3 or 2 in Washington. Um, So additional requirements for down payment assistance, income, geographic locations, restrictions, we've talked about that. Down payment requirements, we've talked about that a little bit. Some require up to $500 of your own money, some up to 1%. Education requirements, almost all of them except all of them require a down payment or education requirement. And again, most of them can be found online at this time. There are some in person, and with the Washington State Housing Finance Commission, there's a link to in-person ones as well. We are not holding them yet at HomeStreet for the homebuyer class. It's usually a 5-hour class if we hold it in person. So being online for 5 hours is kind of tough. And then programs have limited funding. So at times we'll see the funding disappear for a month or two. And sometimes we won't see it again, like on the grant funds, comes out April 1st every year. We won't see it again until April 1st next year, unless some get opened up in September. So the grants usually get reserved quickly because you have to use it within a year. And then if they don't use it, they open it back up for customers. Let's see. And this just kind of talks about how to get ready for budgeting for a home and getting ready for the different programs. But just creating, it just talks about evaluating your current spending, create a budget, your spending versus your income, get your needs and wants. The main thing with the needs and wants is just kind of get the family involved with your budgeting plan. Get it broken down, see what your family needs to do, they need every month. Or let's say you have something that you always do, a family trip or something that you do in the summer, make sure that's budgeted into your monthly budget. Also find out, okay, do you do certain things as a family per month? So get those all things in there, get everybody on board with the budget, and just kind of figure what the best budget plan for the family is. The other thing is get a good tool. Some people just use an Excel spreadsheet. Some people do go on do Quicken, QuickBooks. They can track their money. I've heard some people use Mint.com. So I think there's about 20 different apps out there that you can actually track your spending and figure out, okay, this is where my money's going. You can see where, okay, I'm spending too much here, and maybe I'm not saving enough based on what our savings goal is doing. So, but also set your savings goal. Define what your goal is going to be. Are you saving money for the house? Are you saving money for a new car? Are you saving money for a trip? So figure out what that goal is. And then once you've got that goal, figure out, okay, where you have to save it. So, and just figure out with your needs and wants and what you're going to save. Now, once you go through that budget, let's figure out, okay, what's my payment going to be? So let's use the house as an example. So let's say you're paying $1,500 a month in rent and your new mortgage is going to be $2,000. So right there, what you want to do is try and get your budget set up to make that $2,000 payment. So take the difference between what you want to pay on a mortgage and what you currently pay on rent, and put that away in savings. So that's considered payment shock. The difference between your new mortgage and what your rent payment is going to be is a payment shock. So if you can save that and give yourself some time to save that money and see if that $2,000 is okay to make on a regular basis without breaking the bank, where you're not going in and touching that savings and having to live and or racking up credit card debt to keep that budget in order. Maybe you're spending too much somewhere else. So make sure you stick to that budget. Try and focus on, okay, this $2,000, we can manage this, or maybe it's not. You have to redefine your savings goal. So work it out, see what you have set aside each month, and build that savings up. Let's see, and then okay, so first time home buyer checklist just kind of talks about some of the things to start looking at as a first time home buyer. So check out financial education. So we have a free online financial education course. It's just homestreet.com financial education classes. And so with the online classes, we have a free class that works for most of the down payment assistance programs, except for Housing Finance Commission. But we also have the in-person classes and the online. If we're going to do online classes, are not coming up. So I don't know of any that are set up yet, but I know we will have some. The next part is get pre-qualified. Figure out once what you're approved for by finding your loan officer, determining what programs fit your needs and which one best suits your needs and fits, okay, where we're buying based on your down payment assistance. So make sure you have all the required documentation. It's real simple to usually just figuring out 2 current pay stubs for each borrower. The only time we need 2 months is if you're a teacher and you're paid monthly. A lot of times we need 2 full months of pay stubs for teachers. Everybody else, 1 month is usually sufficient. Copy of recent bank statements, investment accounts covering 2-month period. And this is used, it's where the funds are going to be used for the loan. And we also need all pages for those bank statements. W-2s for all borrowers for the last 2 years. And then self-employed borrowers, we typically need 2 years of your tax returns plus a year-to-date profit and loss statement. So a little bit more needed on self-employed borrowers just to show what the income is on tax returns. And then once you've been pre-approved or pre-qualified, then you want to find your real estate agent. We can recommend someone, if you have family, friends, just find somebody you're comfortable with and somebody you can trust. And so that's the main thing is when you interview your loan officers, interview your real estate agents, making sure it's someone you'd work with. That you, especially with the real estate agent, you're going out and looking at these homes with them. You might be out there for a couple months or even longer, depending on the market. And so it's something you do need to have a personal relationship with that realtor. So getting out there, if it's someone that you go in and they keep kicking you to some of their underlings and they're newer brokers and they're not using their services. So that's what you want to double check. Find out how long they've been doing this. As a realtor, I believe you need 60 hours of clock hours to be a realtor. So find out how long they've been doing this. See if they know how to work in a market like we are in now, which is just a fast-paced buyer's or a seller's market. Or if they've worked in it for the last 10, 15 years, if they've gone through the downturn, if they've gone through a lot of the hardships, because they are self-employed. So they usually know how to get through a lot of tougher situations or tougher markets. So just find out, but we also have a list that we work with on different agents. So find a home, make an offer. Once you find the home with the real estate, you make the offer. And then having the pre-qualification gives you an edge over most buyers. And so the pre-approval is great. Getting pre-qualified and pre-approved is great for that letter, but we can always take it that one step further and have the underwriter sign off on it. And so the realtors are looking at every advantage to make sure that this loan is not going to fall through. So they want to make sure their buyers are strong because they don't want to have to sit and relist the house if the sale falls through. So let's go. And then a couple other things with first-time home buyers, ordering a home inspection. So a lot of times in Seattle, you have to do pre-inspections. If you do a down payment assistance program, they require a paid home inspection. So even if you're waiving your inspection on the program or on the loan to buy the house, just to get that edge. A lot of the down payment assistance programs will still require you to get a home inspection. So it's recommended, um, just so you know, okay, let's go in and look at the house and take a look and make sure that the home inspector looks at the house and just identifies if there's anything wrong with the house that you should be aware of. Again, that's the home inspection is different from the appraisal that the bank will do. So, and then notify your loan officer once you're on a contract, because we need that contract so we can start looking at rates, starting the structure of the loan for you, and give you the rates, show you what the payment's going to be. And then once we get the purchase and sale, that's kind of when we start moving forward. And then the last thing you do once you've got the home under contract and you've got the rate all locked in is start looking for your homeowner's insurance. So you can contact your insurance agent, um, and obtain insurance for the loan, for the home. If it's a condo, a lot of times we won't require insurance. The insurance, is more like a renter's policy with a condo writer. So you get insurance to cover the belongings. So that's just kind of the steps. Oh, if we have one more, sorry. And then once your inspection's complete, that's usually when we want to order your home appraisal. And so we don't want to order an appraisal until your home inspection's done, mainly because if it's something wrong with the home inspection and you want to back out, we don't start charging it, the appraisal fee against you. So the appraisal is the first time when something actually gets ordered that will actually cost you if you cancel the transaction. That'll start, because we have to pay the appraiser for going out and doing the home appraisal. So, but that is different from your home inspection. They're doing to make sure that the house is valued with similar houses in the market. The home inspector is just making sure that the house is in working order. Electricity, water runs, there's no water damage or foundation damage. So they're looking at the structure itself. So, and then signing documents, closing your loan. It's usually about a week before your loan closes. You have some forms to close. You get a closing disclosure, which has your closing costs broken down on it, and then they'll give you a cash to close amount. With that cash to close amount, you'll bring a cashier's check or do a wire transfer before closing. Now, keep in mind with wire transfers, make sure you're speaking with your loan officer or with the escrow company directly, and not answering emails. So if somebody emails you saying, oh, I need you to wire transfer the funds to us, don't do it right away. Make sure, because there's a lot of fraud in emails right now with wire transfers. So they may get your information knowing that you're purchasing a house, somehow spoof your email and get you to transfer them your down payment. So be careful. It's happened quite a bit in this area. It's happening nationwide. Just if you're going to transfer money, make sure you're speaking with your agent on the phone, and the escrow company on the phone, so they know you have the wire amount and where to wire it to. So just keep that in mind. Talk to them in person. So a few resources for first-time home buyers. Now, if you're not ready to buy and you want to work on improving your credit, we work with a nonprofit credit counseling agency, and they also do financial education. It's at my American Financial Solutions. They're based out of Bremerton, and they have some offices in Seattle, but you can get their information off myfinancialgoals.org. And what's nice about that is they can help you improve your credit scores if your credit scores are too low to get into a home. So they're a great basis for getting credit cleaned up, budgeting classes. They have their own education courses for credit and budgeting. They also do foreclosure prevention. They also do housing counseling before you purchase with down payment assistance. So there's some programs that they work with, and they do some counseling for that. It's a great program and a free resource. Now, if you use their credit counseling services where they pay your credit cards for you, that does cost money. That's one thing they do charge for. Next is just kind of talk about Fannie Mae. They're a secondary investor. They're who we do the loans for them and service for them in most cases. And again, FHA is similar to Fannie Mae, but with Federal Housing Administration. They insure low down payments, so you can get as low as 3.5% down. They do renovation loans. it's usually a lower credit score with lower down payment. Freddie Mac is also another investor, is very similar to Fannie Mae. Their information is there. And then HomePath, properties owned by Fannie Mae. You're probably not seeing as many foreclosures from Fannie Mae, but that's a great, well, it was a great resource to find houses that were foreclosed on. Probably not finding as many right now. And then with HomeStreet Bank, our affinity lending program, to get the benefits for the university, you have to go through one of us as a loan officer. There's 6 of us here in Seattle, the Seattle area. So you just go to homestreet.com benefits, and then you can actually click on the University of Washington button. But we do lunch and learns, down payment assistance, reduced closing costs, and realtors' closing costs can be paid, or realtors' commissions pay some of your costs as well. HUD.gov, just kind of the housing urban development, just some more information. USDA is another program that we could do. It's a zero down program in rural areas. So that's another program that we could do. It is income based as well. And then if you're a veteran, we do VA loans as well through the military. So we can do veterans VA loans as well, but you also get your discounts for VA loans with zero down. So just about our program with our benefits, varied loan programs, access to down payment assistance, you save on our closing costs, free homebuyer seminars, budget and credit resources available to immediate family members, which is parents or children. And so those are the main things. And then the realtor portion as well that we work within most of the counties from Skagit down to Thurston and even Kitsap County. We work with agents that offer discounts towards your closing costs. So that just kind of talks about the benefits in a while. So our main benefit on your closing costs is a 0.5% credit of your loan amount. So a $2,000 loan, you get $1,000 towards closing costs. Now, if it's a $300,000 purchase price with a $200,000 loan, you get up to $1,500 to $3,000 from the realtor. So you can get $2,500 to $3,000 for closing costs paid by us from your realtor and from HomeStreet if it's one of our realtors. So you just talk to us. Again, your benefits are only through us at homestreet.com /UW. So that kind of talks about that, most of the benefits right there. So, and then thank you for, hopefully I wasn't going through that too fast, but thank you for letting me talk today. I know it's a lot of information, and what time is it? I don't even know what time it is, but my information's here. If you have questions later, probably email or even just texting me on my mobile is probably the easiest way to get a hold of me right now.
And just thank you. We really appreciate your partnership and working with HomeStreet. And Adia, if you're still on here, thanks for all your coordinating. Hope everyone has a great rest of your day.
Thank you.